performance for this week, which is ended today, and followed by what is our view on the key indices, both Nifty and the banking index, followed by some of the stocks ideas which one can keep a close eye on for the next week. So let's get started. So first, a quick disclaimer that the idea behind this webinar is to share the insight. It's not a trading or investment recommendation. So before making any decision based on the information presented, please make sure that you take advice from your investment advisor. Now, talking about the key indices, both Nifty and Sensex shed over 1% each. After the recent surge that we've seen of late. Again, market failed to witness any decisive up move in the last week, and in fact, the move was gradual. When it comes to the recovery, the move was gradual, but decline in the last two trading session have changed the tone completely. In line with the the key indices, you can see that the sectorial list also looks weak to us because there was hardly any gainers, and on the losing side we have media, reality, FMCG, banking, IT. All these sectors ended in the red in the range of 1 to 2%, and similarly the broader markets are also down in the similar range. Talking about the Nifty 50 performance, stock performance, we have gainers also. So ONGC, Tata Motors, IndusInd Bank, Divis, Bajaj Finance, sorry. These were the stocks which gained in the range of 1.5 to 5%. And similarly, on the weaker side, Asian Paints, Tata Motor, Adani Ports, Infi and ICICI Bank, all these stocks shed in the range of nearly 3% to 5%. So it was more of a mixed week, a consolidation week, wherein profit taking was in the last hours, in the last final sessions, basically change the mood. Now, what to anticipate and what to expect in the next week? First, we'll talk about the key indices. So Nifty is something that we have discussed last week also, that after this candle, small red candle, indications were in the favor that Nifty should witness some consolidation with 18,750 and 18,300 range. After a break, either side break, we're going to see the next move towards the key support or resistance area. So Nifty almost inched towards the level of around 18,700, but couldn't surpass. And then we saw that in the last two sessions, it slipped below 18,300 mark, and today we've ended below this level. So now the last 3-4 candles indicates that there's a bit of consolidation or profit taking mood before marching towards the new milestone, that is 19,000 mark. So keeping that in mind, you can see this red line here on the weekly chart. It's the weekly charts of the index plus this horizontal line. So both these lines coincide close to around 18,000, 18,100 levels. So we expect this area to act as a crucial support, immediate support, and then 17,800 levels. So we expect this profit taking to extend further, taking clues from the global market. Plus, we'll talk about banking sector, which was so far, acting as a savior, because despite the negativity of profit taking in the index, the banking index was maintaining the positive note. But that's not the case now. It's also witnessing profit taking. So indications are in the favor that we should see this profit taking and consolidation extend further below 18,300 mark, and 18,000, 18,100 first support, and then 17,800 is something that market should respect in the next week. Upside, 18,500 to 750, that zone would act as a strong resistance. So any rebound towards that area might again result in selling pressure. So upside seems capped, profit taking may continue, is something that accordingly one should plan their trades. So as of now, we were discussing more about accumulating quality stocks on dips. So positionally, the view remains the same, but yes, for an intermediate, say for a week or two, we can see that the stock specific move also turning southward. So keeping that in mind, maintaining few shorts is also critical. Now talking about the banking index, so as the chart can easily signifies that the kind of quantum or momentum that we were seeing, that a steady uptrend, almost 6 weeks of up move. Finally, this week we have ended lower. So now after this, profit taking, indications are in the favor that it may gradually inch lower, and a level close to around 42,900, which is almost, ended closer to that mark, would act as the immediate support. And below that, 41,900, this, horizontal line is coming closer to around 41,900. So the previous swing higher should now act as a support. So that is what, the indications are. Another important aspect is that PSUs, we kept on saying this, that you should keep on trailing your stop losses. So that views remain the same. Private banks are basically, witnessing mixed trend. So while SDFC Twins, Axis, IndusInd Bank, they are holding strong. They are witnessing, up move with the bias on the positive side. At the same time, ICICI is basically drifting lower. So keeping that in mind, the idea should be more of like, be selective in this space, especially PSUs. Be strict with your stop losses. Keep trailing your stop losses in case if you're profitable in those positions. And in private banking space, be selective. So for time being, ICICI is in avoid. Go for accumulation in excess. SDFC Twins, IndusInd Bank. So yeah, these are the counters that one can look at. Similarly, we talked about the support, that 42,900, 41,900, upside around 44,250 to 44,800. So 44,250 we couldn't surpass, and that's why we are seeing this profit taking. So that would continue to act as this. So the resistance remains the same. So now, since we have a clarity on how the index are going to perform, so for Nifty, we are seeing that profit taking is going to extend further, and similarly in the banking index, we are also getting similar kind of signals. Stock specific, still we have like few pockets, few sectors which are holding strong. So one can look at those stock ideas accordingly. The first on the list, we have Balrampur Chini. So Balrampur, the chart clearly shows that after this decline, this entire phase was a phase wherein the stock, made a reversal pattern. So this is basically an inverted head and shoulder, which is a bullish reversal pattern, and it has finally witnessed a breakout from the same as well. So despite the negativity that we are in the market, Balrampur Chini have not only sustained the gains, but also inched higher across the major resistance areas also. So yes, there could be a pause around 405, 406 levels, but the way it has performed, plus it has holding strongly above the long-term averages also. So all these factors indicates that this positive momentum to extend further. Next on the list, FMCG basket. Though here also we are seeing mixed trends. So last week we talked about like to be selective in this space, because Colgate Palmolive, we were anticipating this move to continue, but it fizzled out. And similarly, like Britannia is still holding strong. ITC, again, we are seeing a bit of profit taking. But HUL, if you see that this move, last 3, 4, 5 weeks of move, almost a very strong recovery from 2,400 to 2,750 levels, and now a bit of breather. So within this pattern, now we, it's a broadening formation basically, and you can say it's a cup and handle also, which also indicates a continuation of the trend. So there may be a possibility that the stock might range, consolidate in the range before making an attempt to cross this hurdle, the upper band of this range, and make a new high. So possibility of that remains very strong, considering the kind of strong candles that it has formed on the weekly chart in the previous weeks. So this is opportunity to accumulate this stock in this recent correction that we are seeing in the market right now. And about 2,750, in case if you want to play momentum, wait for a breakout about 2,750, and then the stock would see a very strong surge. But at times it becomes very difficult to time stocks, because usually we see a gap up, a gap down around the key areas, resistance and support areas. So that is the reason that why we are recommending that one can look at HUL for accumulation candidate, not to buy at the current levels. Now, since the tone is negative, obviously one should maintain a few shorts also. So within the auto basket, Bajaj Auto we've discussed about this stock like a couple of weeks ago, when the stock witnessed a breakdown from the flag pattern. Initial decline followed by a marginal rebound, but again, it is drifting lower. It has breached the previous swing low also. So that clearly indicates that the negative move that we are seeing right now is going to extend close to around this 3450, 38, 3480 zone. It might witness a breather, but the tone is likely to remain negative. So within the auto space, M&M, TVS that we have shared earlier also are some of these stocks which were the leaders when the market started recovering, the auto pack started recovering. So they were still holding strong around the record highs, but Bajaj Auto was among the second tier of the stocks, which also performed well, but it couldn't sustain. So keeping that in mind, shorting is something that one can look at, but only through the options, something that we recommend. Lastly on the list, Z Limited. So again, an underperforming stock from the media basket. So, this trend line definitely shows that the trend is up in the short term, means it's in a recovery phase. But if you see that, from last 5-6 years, the overall trend is down. So it's just a recovery phase, but in this recovery, it has made multiple attempts to surpass the resistance area of the major moving averages. Despite multiple attempts, it couldn't sustain. And again, now it's, witnessing a breakdown from the same. So there's a possibility that it's going to retest this trend line, or maybe inch further lower. So the risk to reward is favorable in Z Limited, considering that it's still hovering around the upper band of that range. So this is something that one can look at for the next week for shorting trade. So just to sum it up, our observations: first, Nifty may continue to see the profit taking. After the decline below 18,300 mark, 18,000, 18,100 first support, then 17,800 area. To negate this, profit taking, it should decisively reclaim 18,500 mark, then 18,750 and 19,000 is going to be the area. So as of now, indications are pointing towards that this profit taking may extend further. Why? Because banking, which was earlier holding strong, which was capping the damage in the index, is also witnessing profit taking. So that may result in further decline in market. So for banking index, 42,900 is critical support. We ended almost closer to that mark. Below that, this profit taking may extend in the banking space also. Especially in the PSUs, maintain strict stop losses. Otherwise, you end up holding wrong stocks at the wrong prices. Private banks, still we have a preference, but again, in that case also, one needs to be selective, barring ICICI, which is slightly on the weaker note. You can consider accumulating the other stock, and it's a very short-term view. ICICI positionally still looks strong. It's just that the short-term looks sideways to negative to us. Other than that, we talked about 4 stocks, 2 on the positive side: Balrampur Chini, HUL, and stocks which looks negative to us: Bajaj Auto and Z Limited. So yeah, that is all from the presentation part. Now we'll have a quick poll followed by the Q&A session. So can we have the poll, please? Komal? So please quickly fill this feedback so that we can start with the Q&A. And for the Q&A, please use that Q&A button, not the chat box. And also, just to reiterate that the question should be around the presentation, means the sectors that we have discussed, the stocks that we have discussed, no individual stock specific queries, because that would dilute the entire purpose of having this webinar, wherein we talk about the general structure of the market and certain pockets structurally, which looks weak and positive to us, and some of these sectors definitely we can answer. So anything around sectors, definitely we can answer, but no stock specific queries, please. So if you are done with the feedback, you can start posting your question in the Q&A tab. Please quickly fill this feedback poll so that we can start with the Q&A. You can start posting your questions now. Okay, let's conclude the poll. We can start with the Q&A now. All right, so the first question is from Mr. Ramesh on the IT sector outlook. So, Mr. Ramesh, as we were discussing about, almost all the sectors witnessing profit taking, and it was banking and FMCG so far, which was, saving the markets. So IT was anyways, witnessing decline, and especially, I would say more of like erratic swings, because after a breakout from a 11-month consolidation, a corrective phase, in last 2-3 weeks, it has declined and re-entered into that territory. So after a strong, a prolonged period of consolidation and breakout thereafter, it should not behave like that. So it should be like this consolidation breakout is not success, and again we're going to see a fresh consolidation in the IT pack. So for a time being, comparatively, I would say that the IT majors looks strong. So like TCS, Infosys, they are comparatively stronger structure. Avoid Wipro, avoid the mid-cap ID names, except few names like Persistent, which is holding strong. There's some of the names in the mid-cap ID basket. So broadly, I would say that even if the market is going to reverse from the current levels, I doubt that the participation from the IT pack is going to be the in a singular quantum that we are seeing in banking or any other sector which are topping the charts. All right, next question on fertilizers and NBFC space from Rakesh. So, fertilizers, yes, we are seeing traction ahead of this, union budget, which is scheduled in February. So, news and rumors are there. Plus, if you see that some of these structures from the fertilizer basket, they are trading at the record highs after 8-10 years of consolidation. So that's the reason why we are seeing that very strong traction across the board. But is it okay to buy those stock now? So I feel that it's slightly late, considering that the move that we have seen in the last 1-2 months in some of these fertilizer names. So for fresh buying, one should wait for some consolidation and then attempt a fresh trade. And other than that, stick with the stocks which are trading at the record highs, because only the top companies from this particular space is basically witnessing the similar kind of traction. Usually the other names, they do see a catch-up move, but they end up fizzling out once the budget is over. So stick with the top names. Yeah, NBFC as a sector, again, if you see that it's a mixed bag here also, wherein M&M Finance, Shriram Transport Finance, they are doing well. If we talk about the short-term price performance, at the same time, Bajaj Finance, after that recent dip, we are seeing gradual recovery, but it's not very decisive. So we are seeing a similar kind of trend. If you talk about the other smaller names like Poonawalla Finance and other companies. So for a time being, I feel that with the decline in the banking space, it's prudent that one should be selective in this space also. So M&M and Shriram Transport Finance, these are top, the best structure that we have right now within the NBFC space. So Mr. Balasubramaniam has a question which is not about the presentation or anything related to the any sector, but his question is around investments. So he's saying that long-term SIP, I will plan for the investment as well as the lump sum, which industry you choose. So Mr. Balasubramaniam, I would recommend you not to stick with, start with at least thematic, MF, or because in case if you go wrong, let's say if you choose banking or if you choose IT index MF based MF, so in case if that sector doesn't perform in that particular year, you'll end up losing your money. At the same time, it will be more of like a very means a very selective approach. So this is something that at least to start with one should not look at. So to start with, in case if you are making first time investment, go with the index fund. All right, next question we have on the metal sector. So yes, metal as a sector also, despite the ongoing, global turmoil and the news related to slowdown, China, COVID, the metal stocks are doing well. In fact, JSW Steel is, trading around the record highs. Jindal Steel is also trading around the record highs. Hindalco, Tata Steel, VEDL, they were also, witnessing catch-up move. So I feel that metal as a sector will continue to do well, but again, here the top performing names like Jindal Steel, JSW Steel, that should be preferred for accumulation in case of any dip. All right, the next question is on the FMCG sector. So FMCG, like while we were discussing about HUL, that this is the stock that one can look at to accumulate while the markets are witnessing profit taking. I feel that apart from HUL, Britannia looks very strong to us because the stock is trading at the record high, and despite the profit taking and decline in the market, it's still hovering around the record highs. Looks strong. In fact, it has witnessed a breakout also from the consolidation band. So be selective in this space also. So for time being, avoid ITC if the view is short term. Avoid Colgate also because the pattern has reversed. And for preference, HUL and Britannia, these are the two names that we like. So like we discussed about 18,300 in the Nifty being a critical support, it has breeze. So yes, one should continue with sell on rise approach in the market. And as we've discussed, 18,000, 18,100 first support and then 17,800. But where to go short is something that one should look at once the market open on Monday. In case if there'll be any recovery closer to around 18,400, 450 levels, that would be the ideal area. Go short in. All right. So yes, we have answered all the queries, I guess. Yes. So with this, we can end this webinar. So next week, same time, we'll connect at 4 p.m. So till then, take care. Thank you. Thank you for joining in.